Elon Musk, one of President Trump's biggest supporters, reposted Republican Senator Mike Lee's post on social media X with the 100% symbol, supporting the idea of abolishing the Fed. According to Mike Lee, the Fed is an agency that does not belong to the president's power, which is against the Constitution. This is the reason why many Republicans want to dissolve the Fed and put control of the money supply in the hands of the president. Although Trump has not announced his support for this, his team emphasizes that all policies will be decided by President Trump himself. Should the U.S. Federal Reserve, also known as the FED, continue to exist? This is not only an economic issue, but also contains major conflicts of power between the government and the most powerful financial agency in the world. Let's take a deeper look at this story. During his campaign, Trump promised to lower interest rates, although in reality, the president cannot directly adjust interest rates. Since 1951, the Fed has been given the independent authority to set interest rate policy by Congress without political influence. This allows the Fed to make unpopular decisions that are beneficial to the economy in the long run. If Trump pressures the Fed to lower interest rates, this could cause inflation to rise again, which would be counterproductive to the Fed's price stability goal. Trump has said that he wants to fire or demote Fed Chairman Jerome Powell, whom he has criticized for keeping interest rates too high. However, the law stipulates that the Fed chairman can only be fired for cause under the Federal Reserve Act, not just for policy differences with the president. Powell has also made it clear that he cannot be fired simply because of these differences. Therefore, Trump's power to reform the Fed faces many legal limitations. Why is the Fed important to the U.S. economy? The Federal Reserve, also known as the Fed, is the central bank of the U.S. Established in 1913, the Fed plays a role in regulating the economy, ensuring the stability of the financial system, and managing the country's monetary policy. Not only does it affect the U.S., the Fed also has a strong impact on the global economy because the USD is the international reserve currency. Any decision of the FED on interest rates, money supply, or financial policy has the potential to change the flow of economies around the world. The Fed is not only a central bank in the traditional sense, but also a powerful agency that can implement policies independently of the government. This autonomy allows the Fed to focus on achieving long-term goals, such as controlling inflation, maintaining employment, and stabilizing prices rather than being swayed by short-term political interests. The Fed acts as the guardian of the world's largest economy. It is tasked with balancing two important factors: price stability and maximum employment. Through tools such as adjusting interest rates, buying and selling bonds, and supervising the banking system, the Fed can control inflation, minimize financial shocks, and ensure the smooth flow of capital in the economy. For example, during economic crises, such as the Great Recession of 2008, the Fed took drastic measures such as cutting interest rates to near zero and pumping money into the market to stimulate growth. These actions helped the United States overcome difficult times and avoid a more serious recession. The Fed's unique feature is its independence in policymaking. Since 1951, the Fed has been given complete autonomy in setting interest rate policy without direct government intervention. This is to ensure that the Fed's decisions are not influenced by the short-term political goals of any administration. However, this independence has sometimes become the focus of debate. Many argue that the lack of close government oversight makes the Fed too powerful. Some critics, especially from the Republican Party, argue that the Fed can make policies that are not in the interests of the people and the government of the day. Over the past century, the Fed has faced criticism and pressure from the government many times. Disagreements over monetary policy, especially interest rates, have often made U.S. presidents unhappy. For example, under President Donald Trump, the Fed and Chairman Jerome Powell clashed bitterly when Trump wanted to lower interest rates to stimulate the economy, while Powell insisted on keeping interest rates high to control inflation. The independence of the Fed also raises a big question. Does this agency really operate for the common good, or is it dominated by the oligarchs, as many conspiracy theories have mentioned? This is the reason why some people, like Elon Musk, question the existence of the Fed. Despite criticism, the Fed remains an indispensable pillar of the U.S. economic system. Maintaining an independent agency to regulate monetary policy helps the U.S. avoid major fluctuations. History has shown that when politics interfere too deeply in monetary decisions, the consequences are often very serious. A typical example is in the 1970s when political pressure forced the Fed to loosen policy, leading to prolonged inflation and economic crisis in the early 1980s. The Fed not only plays a role in stabilizing the U.S. economy, but also ensures global confidence in the U.S. dollar and the international financial system. With more than 70 years of independent operation, the Fed has helped the U.S. overcome many economic crises and continue to maintain its position as the world's leading economic superpower. Elon Musk, a major influencer in the fields of technology and finance, recently publicly supported the idea of abolishing the Federal Reserve, FED. In his latest move, he shared an article by Republican Senator Mike Lee on social network X, formerly Twitter. The article emphasized the view that the Fed is an independent agency, not subject to presidential control, which some critics say goes against the U.S. Constitution. Musk's endorsement of this idea has attracted widespread attention, sparking discussions about the role and power of the Fed. Republicans, especially supporters of former President Donald Trump, have long been skeptical of the Fed's independence. Some argue that the Fed, with its power to control the money supply and set interest rates, is operating as an entity beyond the reach of the elected government. This raises concerns that the Fed does not truly reflect the will of the people and may make decisions that are not in the country's best interest in the short term, even if they make sense in the long term. Critics argue that the Fed's independence, which has been protected by law since 1951, could be considered unconstitutional. The argument is based on the view that monetary policy, which directly affects the economy and people's lives, should be controlled by elected officials, namely the President and Congress, rather than an independent agency. The Fed's ability to operate without consulting the sitting administration is seen as a challenge to the President's power, raising potential constitutional issues. Some Republicans have proposed shifting monetary control from the Fed to the President or a government agency. However, this idea is highly controversial. Fed supporters argue that the agency's independence has been a key factor in helping the United States weather many of the major economic crises in its history. If the Fed were to be dismantled or its powers transferred to a political body, interest rates and monetary policy could become tools for short-term government goals, leading to the risk of economic instability. Elon Musk's involvement in this debate goes beyond sharing the article. As one of the largest donors to Donald Trump's campaign, Musk is considered a prominent voice in the Republican camp. His public support for a review of the Fed's role could signal a larger campaign to change the current power structure. This, if implemented, would not only affect the U.S. economy, but also have global implications, as the Fed is one of the most influential financial institutions in the world. Fed supporters, on the other hand, argue that the agency needs its independence to make difficult, even unpopular, decisions to ensure long-term economic stability. They emphasize that the Fed has played a key role in controlling inflation, boosting employment, and supporting the economy through crises ranging from the Great Recession to the COVID-19 pandemic. Transferring control of the currency to the government could reduce transparency and increase the risk of policy abuse for political gain. Throughout his first term, Donald Trump made clear his displeasure with the Fed as it raised interest rates, which he said were hindering his economic growth goals. Trump has promised to lower interest rates to boost spending and investment. Although under U.S. law, the president does not have the authority to directly intervene in the Fed's monetary policy. This is one of the major points of contention between Trump and Jerome Powell, the Fed chairman, who was appointed by Trump but later became the subject of heavy criticism. Powell has steadfastly maintained a policy of high interest rates to control inflation, despite pressure from the White House. This shows a confrontation not only in policy, but also in views between the two sides, raising questions about the role and power of the president in influencing important economic decisions of the country. The tense relationship between the president and the Fed is not new. In the 1970s, President Richard Nixon pressured the Fed to loosen monetary policy, leading to a decade of high inflation and economic crisis. This is a historical lesson that highlights the serious consequences when the independence of the Fed is violated. If Trump returns to the White House, the relationship between him and the Fed will likely continue to be a flashpoint. especially since he has publicly expressed his intention to pressure the Fed to lower interest rates. However, this could lead to the risk of increasing inflation and losing market confidence. The Fed, with its role of protecting long-term economic stability, will certainly not easily give in, promising a fierce confrontation if Trump implements direct intervention policies. The independence of the Fed is an important factor in ensuring that monetary policies are made based on the long-term interests of the economy, rather than being pressured by short-term political goals. It is this independence that has helped the Fed deal with many major economic crises, from the Great Depression to the financial crisis of 2008. The Fed operates with two main goals: price stability and maximum employment. Maintaining high interest rates today to control inflation is a testament to this principle, even though it is unpopular with the people and even the government. If control of the Fed falls into the hands of political bodies, such as the president, monetary policy may be dominated by short-term goals, destabilizing the economy. Therefore, protecting the independence of the Fed is not only protecting a financial institution, but also protecting the stability and sustainable development of the U.S. economy. From a legal and political perspective, changing the power or structure of the Fed is an extremely difficult task. Although Donald Trump and his political allies have repeatedly criticized the Fed and even proposed the idea of eliminating this agency, in reality, they will have to face a series of legal and institutional barriers. First, U.S. law clearly stipulates that the Fed chairman can only be removed for misconduct or failure to fulfill his duties, but cannot be removed for policy differences with the president. This ensures that the Fed is not affected by political pressure in economic decisions. Second, legislative bodies such as the U.S. Congress and the Supreme Court have repeatedly affirmed the role of the Fed as an independent institution, not dominated by the government. Recently, the U.S. Supreme Court refused to consider a case that could affect the independence of independent agencies, such as the Fed, which shows that interfering with the Fed's power will be very difficult to implement, even with the support of the majority of the Republican Party. Finally, reforming the Fed will not only affect the U.S. economy, but also cause strong reactions from the global financial market. The Fed not only operates the U.S. financial system, but also plays a central role in stabilizing the global economic system. If there are any major changes in the Fed's structure, economic and financial instability may spread, weakening the U.S.'s position in the international arena. Thus, although the idea of reforming or eliminating the Fed receives support from a political segment, in reality, this is a challenging and potentially risky task, not only for the U.S., but also for the global economy. Elon Musk and those who advocate the idea of abolishing the Fed have sparked a major debate about the role and power of the U.S. central bank. While the Fed is designed to operate independently, avoiding short-term political influences, proposals such as putting monetary control in the hands of the president could create historic but also risky changes for the economy. Will this intervention really bring long-term benefits, or will it weaken the stable foundation of the financial system? Let's see the next developments that will be updated on the Next World channel.